Hey, Eric here from 5minuteinvesting.com, and today we're going to talk about TFSA account, which stands for tax-free savings account. What is it? How does it work? What should you do with it? And how can you maximize your wealth using a TFSA account? So let's start with what's a tax-free savings account. So a tax-free savings account is a Canadian savings account where it allows you to put in after-tax money into the account. Then you can compound or you can grow your account without getting taxed again. So if you're living in Canada, the capital gain tax is 25%, and using a TFSA account, you can grow your money without getting taxed over and over again each time you make a transaction. So it's quite an important tax saving vehicle. Now, when you take it out, you actually don't get taxed as well. So this is an important concept, because when you put it in, you use your after-tax money. So as you make transactions and as you grow the account, you don't get taxed, and when you take it out, you don't get taxed as well. So that's quite important. And once you take it out, you can recontribute back up to the contribution limit. So what is the contribution limit for TFSA? So for TFSA, as of the moment I'm recording the video right now, the contribution limit total is around $63,000. And on an annual basis, you'll get an additional $5,000 that you can contribute to your TFSA account. So I guess you can think about it, every 10 years you get around $50,000 to $60,000 that you can contribute to your TFSA after tax, and it can grow tax-free for as long as you like. Okay, so I think one of the more common questions is, what is the difference between RRSP, which stands for Retirement Savings Account, Retirement Savings Plan, versus TFSA, which is a tax-free savings account. So for RRSP, when you put money into the account, it actually is considered to be a pre-tax money. So that means you get a tax refund for the year you put money in. Then you can grow your money within an RRSP for as long as you like. Usually people let it grow until they retire, and then they take it out. And when you take it out during that time, you'll get taxed that year. So it's quite an important concept, because the moment you contribute into your RRSP, you get your tax refund back, and then when you take it out, you get taxed at that year. So if during that year you have no income whatsoever, let's say you're retired, then your tax rate will be quite low in Canada. Now for TFSA, it's different, because you already paid a tax the year you contributed. So then you don't get taxed even when you take it out later on when you retire, or anytime you want. So when you think about it, you want to contribute money to RRSP and you want to contribute money to TFSA, but when you take it out, you want to think about what is the income level for that year. So if your income level is really high, then you really want to take out your money from TFSA, and if your income level is really low, then you want to take out money from RRSP. Now of course, if you leave your money in RRSP and TFSA, you want it to compound, you want it to grow for years to come. So you don't necessarily want to take money out of those accounts until you're retired. Okay, all right. So there are quite a few different versions of TFSA accounts. Now most people, when you go to the bank, you're going to get what they call a regular TFSA account, or a high interest rate savings TFSA account. So this allows you to invest in mutual funds. This allows you to just have a savings account where you're earning an interest of 2 to 3% for savings. That will probably be considered on the high end nowadays, or 4 to 7% for mutual funds. So it's not a lot, it's all right, and they're just treating it like any accounts where you can invest in mutual funds. Now what a lot of people don't realize is that you can actually have a self-directed TFSA account, and that is actually quite important, because when you open a regular TFSA account, your only options are the funds that are available in the broker or in the bank that basically the bank teller is giving you. But if you use a self-directed TFSA account, you can actually invest in any stock you like in the market. So for example, I can have a Canadian TFSA account and I can still invest in US stock. And that is a very important concept. And that's exactly what I have. So I have a Canadian TFSA account. It's kind of weird I'm calling it Canadian because only Canadians can get it. And also a US TFSA account. So that means I can invest in Canadian stocks as well as US stocks. Okay, so if you are interested in managing your own portfolio, then I would definitely recommend you to get a self-directed TFSA account. Now you might be wondering, well, should I get a self-directed RRSP account as well? And the answer is yes, because that will give you a lot more freedom, and you can still buy mutual funds if you want, but you can get both self-directed TFSA and self-directed RRSP account. Yeah. Okay, so what is the best investment option for TFSA? Now I think this is a great question, and it really comes down to what are you going to do with your RRSP. So when you're looking at TFSA, you can really consider buying index fund, mutual fund, savings account. I think you can buy real estate investment trust as well, which stands for REIT, and you can manage your own portfolio. So for myself, I've mastered investing and I know how to invest in the market, so I always go for a self-directed account where I can pick my own stocks and I can choose what I want to invest in. Now, but if you don't want to manage your portfolio at all and you just want to earn an average return of around 4 to 7%, then you can just choose a mutual fund or an ETF fund. So a ETF is relatively safer and it has a lower management fee, usually around 0.5 to 1%. And I wouldn't recommend a savings account because you're just holding cash, pretty much cash or cash-like, and the interest rate is quite low, so it's not really worth it. Okay. So the last one is the best TFSA investment, in my opinion. So when you're looking at TFSA, which you're going to buy mutual funds or index fund, there's really no leverage within these investment vehicles. But what a lot of people don't know is if you open a self-directed TFSA account, you can actually enable stock option investing. And that's very important because stock options itself has leverage in it. So let me explain. So let's say you contributed $60,000 into your TFSA account. Now, even if you have a credit line or if you can borrow money, you wouldn't be able to put the additional amount of money you borrowed into the TFSA account and then invest. So you can't do that because your contribution limit is $63,000 and you contributed already. But if you enable self-directed option investing TFSA account, it's just an extra form you need to fill out, then you can actually use options to invest in the market, and options have built-in leverage. So in a way, you can use leverage within TFSA account, which will accelerate the growth of your portfolio. So in a way, you're investing with your money, but at the same time, you're also investing with someone else's money through the use of stock options. And that is one of the secrets that I use to generate 30% from the market. And I put it all into a course called Investing Accelerator. So that is really it for TFSA account. If you are Canadian and you don't have one, or you're not fully contributing to this maximum figure, then I would definitely recommend you to max out your TFSA account. And you can only do that when you're living in Canada and you're considered to be as a resident. So right now I actually moved out of Canada, so I'm living in Hong Kong now, so I can't contribute to my TFSA account anymore. So yeah, it's an important consideration. So that's pretty much it. If you have any questions, you can leave a question below. You can click subscribe if you want more videos, and you can give me some feedback on what kind of videos you would hope to watch in the future.